I'm determined to deliver growth, create wealth, and put more money in people's pockets. This can only be achieved by working people in partnership with leading businesses, like BlackRock, to capitalise on the UK's position as a world-leading hub for investment.
The thing that stuck with me when I think about what he said there is this idea that BlackRock is actually a business that does things, which is not what it does.
Do you think Keir Starmer knows what he's talking about?
No, I don't think he has any idea at all.
You don't have to go far on YouTube to find critiques of capitalism. Capitalism is crisis. Capitalism is doomed to fail. Maybe. But here on Novara Media, we also like to offer a little bit more detail about the people, ideas, organisations that you probably hear about on a daily or weekly basis. One of them is BlackRock. Like I say, you've probably heard of them before, but what do they do? Why do they matter? How come they're so politically influential? Britain's Prime Minister Keir Starmer recently appeared in a photo with the CEO of BlackRock that was posted on Twitter. And Keir Starmer said that Britain's future prosperity depends on the likes of BlackRock. But what precisely is their business after all? They're in the financial services industry, but they're not a bank. And why is the Prime Minister so obsequious to them? Why is he bending the knee to a company you've probably heard of but don't really fully understand? To discuss all of that and more is today's guest. It's a record-breaking third time to welcome him on Downstream. Brett Christophers, thanks for joining us once again.
Thanks for having me. It's good to be back.
It's great to have you. I think you're the first guest we've had on 3 times.
Wow, I'm honoured.
Yeah.
Yeah. Hopefully it's worthwhile. We'll see.
Well, you're first still, of all the people we've interviewed and all the things we've talked about, the first interview we did with you, which was about asset management.
Yep.
And your brilliant book, Our Lives in Their Portfolio.
Yep.
Brilliant book. I think that's got something like 300,000 views by now. I never expected that. I thought maybe if it gets 100,000 views and we're taking that to a really, a broader audience, then usually talks about asset managers. Great.
Yeah, awesome.
But clearly people are really interested in that stuff.
Yeah.
Do you think that interest in asset management, the likes of BlackRock, Blackstone, has increased in the last couple of years? And if it has, why?
Yeah, that's a great question. I mean, it's clearly increased. I mean, the big uptick in interest and awareness was from around the time of the financial crisis for reasons we talked about then, which was the fact that there was a partial kind of displacement of the classical kind of power brokers within the finance sectors, which was banks, investment and commercial banks, the Goldmans, the Morgan Stanleys and so on, by the Blackstones and the BlackRocks and the KKRs. And so that absolutely occurred during the 2010s. But it does seem, I agree with you, that it seems to have kind of ratcheted up another level in the last few years. I don't know what the exact reason for that is. I think that in the UK case, I think it's that there is a greater awareness of companies like Blackstone and BlackRock, not least because they get, invoked and sort of curried to by the political class here in a way that I don't think happened before. So I think in the UK, that's probably the explanation for why there's been an uptick. Starmer likes his photo opportunities, and Rachel Reeves as well. Has her infrastructure council talking to the Blackstones and the BlackRocks about investing in Britain's future and so on and so forth. So I think there has been an uptick. But I think the other thing is that there's been a lot more. I mean, I noticed this having been part of the phenomenon. There's just a lot more stuff being written about that world now, particularly private equity, but not only private equity. There's been a slew of books on both sides of the Atlantic in the last few years, and there's more coming. I know of at least 2 or 3 really good books that are coming as well. So there's just a lot more being written about it. So I think there's a bunch of different reasons. So I'm as surprised as you were by the 300,000 views, but I think people are realizing that these actors have a really significant impact on our daily lives, and that was not obvious until relatively recently.
I think another thing as well is that they draw criticism from both the left and the right for different reasons. So I wonder how many people they see asset management and they think this guy's going to talk about ESG and Pride Month, and debanking and Coots and Farage. And I know your views on, well, I know some of your views on that stuff, but you're talking about something quite fundamentally different. But it's interesting that there are quite strong talking points from both sides of the political spectrum.
Absolutely. And I know, so for, I think the best example of that is the growing involvement, particularly since the financial crisis, of the likes of Blackstone and so on, in the US, in the ownership of housing, in the ownership of rental housing, and in particular rental housing for not particularly wealthy people. And you get equal amounts of criticism of that from the Elizabeth Warrens on the left and the Josh Hawleys on the right. It's the one, they wouldn't talk to each other about it, but they're basically coming with the same arguments. These types of kind of rapacious actors shouldn't be involved in owning these types of assets. And as you say, it's one of the very, very few things where left and right kind of see to eye to eye. So it's very interesting that it continues to happen regardless.
And what do you think of the ESG angle? We didn't really talk about that much. But...
Well, yeah, so ESG is a really interesting one. And ESG is basically dying, is my view on this.
This is the woke capital. What does ESG mean? Let's start with that.
So ESG stands for environmental, social, and governance. It's kind of a not very catchy title, ESG. But the basic idea was, and it really took off from kind of around the mid 2010s, late 2010s. The basic idea was that investors, professional investors, were going to start taking ESG criteria seriously. So when they carried out their investment, they would try to channel that investment towards firms who take environmental and social concerns seriously. And environmental has always been the main part of it. The S and the G have been a lesser part of it. And I think there were 2 or 3 different rationales for why they did that. I think the first was there were definitely people in the investment world who believed that investments would generate a superior return. If you invested in environmentally friendly companies, they would generate better returns. They'd be more profitable. Green capitalism is this kind of wonderful thing which is going to save the planet and it's going to make people a lot of money. So some people believe that. I don't think many people believed it, but some people definitely believed it. I think the second thing was PR. I mean, it was clearly a significant PR angle to it. It was, you have to be on board that train, or there might be some pension funds who will not give you their money to invest if you're not investing it in an ethically progressive way, and all the rest of it. And then I think the third thing was just from a competitive angle. It was very much about, this is how we're going to enhance the level of capital that is coming to us to invest. There was a whole range of different reasons why people were doing it. And I think what's happened over the last 2 or 3 years is that people have given up on that. And I think they've given up primarily in the US. And I think they gave up for 2 main reasons. So one was they realized that green capital is not such a great investment opportunity after all. The returns on renewables companies have been terrible for the last 2 or 3 years, and so I think that sort of part of the rationale disappeared. But then I think the other thing that's happened is that I think it became clear, particularly in the US, much less so in Europe, I think, that actually a lot of investors didn't care as much about these things as they had been led to believe. And so at the end of the day, I think, the big asset managers have basically realized that their clients ultimately just want them to maximize investment returns. And so the idea that you have to at least, maybe pretend's the wrong word, but at least give the impression of investing in an ethically progressive way has become less important, because they realize you don't have to do that to remain competitive. So lots and lots of funds with an ESG focus have been shut down and so on the US side. But I think it's happening in Europe now. I think I have an old friend who was until recently head of ESG at a major European asset manager. He got fired a couple of months ago, and people across that part of the industry are losing their jobs. I think it's a.
Did he tell you why he got fired?
Because I think companies are realizing that ESG is simply not something they have to invest in as part of their business model to the extent that they felt that they had to previously.
Yeah. So I wonder, you've outlined the economic rationale, which makes total sense. Actually, we should just focus on our bottom line, maximize shareholder returns, et cetera, et cetera, et cetera. I wonder if there's also another side to that, which is post-Trump 2016, there was just such a massive political blowback to a lot of this stuff. And even for people who might actually believe in some of it a little bit, they just think, you know what, bugger this. I cannot be bothered. Sod it. Let's just not do it. It's not worth it.
I think that's true in the US, but the fact it's also happening in Europe, I think, is what's really telling, because you don't really have that political blowback in Europe, but that disinvestment is occurring regardless. I mean, I think it's, to my mind, and maybe this is being overly doomerist about it. To my mind, it's part of a broader phenomenon, where I think that in the 5 or 6 years after the Paris Climate Agreement, which was 2015, 2016, there was significant hope amongst large parts of the population and the professional classes that governments were getting serious about climate, and that they were going to take measures, whether that's significant carbon taxes or whatever else it might be, that would really entail a shift away from fossil fuel-led capitalism. I think that what's happened over the last 3 or 4 years in particular is that the realization has kind of dawned, and people don't really want to say it explicitly, but I think people are sort of implicitly seeing it, that it's not happening, and that the governments are actually not serious about taking the types of actions that are necessary to keep temperatures at 2 degrees, 2.5 degrees, forget 1.5 degrees.
2.5. Governments aren't serious about keeping temperatures to 2.5 degrees.
I mean, of course, they're not going to say that, but no, I don't think they're remotely serious about it. I mean, so I was in Norway recently, and so in May 2021, the International Energy Agency came out with this really, I think, an incredibly significant report, which they called it Net Zero by 2050. And they basically said, look, for the energy sector, which is obviously the very heart of the climate problem, for the energy sector to be able to be net zero, not actual zero, net zero by 2050, this is the kind of path it has to take over the next 29 years, whatever it was. Yeah, it was 2021. So the next 29 years. And they basically said, for that to be possible, there can be no new approvals of oil and gas field developments and no new approvals of coal mines anywhere in the world from this day forward. None, zero, to have any chance of hitting net zero by 2050. And so, as I said, I was in Norway a few weeks ago. Over 160 approvals of new oil and gas field development licenses have been approved just in Norway since May 2021. So no, the government's on remotely serious. Oil and gas field development licenses have been showered like confetti around the world since then. And so I think the investment world looks at what governments are doing and they say, governments, which have to be the ones that take the lead, are not serious about this. So why should we be serious about this? If governments are not taking the types of actions that will make fossil fuel investments less profitable and green capitalism much more profitable, why would we bother with ESG?
So 2 questions then. One is, and I can hear, somebody who watches GB News, follows Farage on social media, maybe votes Reform. I hope those kinds of people are watching this because I think you've got important things to tell them. I can hear them say, so Britain is not granting any new oil and gas licenses in the North Sea.
Yep.
This gentleman is saying that other people are, and that's why we're not going to meet those targets anyway.
Yeah.
Is the UK governed by schmucks? Right, that makes no sense.
No, it's a good question.
What's your view there?
Yeah, I think there's a very simple answer to that, which is that, well, first of all, there are certain new oil and gas fields where it remains a little bit unclear in the UK whether they're going to be developed or not. They're subject to legal objections at the moment that are still in the courts. But the bottom line that people need to understand about the UK is two things. So first of all, the North Sea is one of the most kind of exhausted, exploited hydrocarbon basins in the world. All the readily exploited resources have, for the most part, already been exploited. So what's left is very, very hard to get at. And accordingly, it's very, very expensive to extract. And so if you look at a chart that shows you the kind of per barrel cost of extracting the remaining hydrocarbon reserves in the Earth's crust, I don't know, in Saudi Arabia, which I think is the cheapest, it's like $5 a barrel. In the UK, it's like $80 a barrel. Something. So there's a marginal cost to it, and so the profitability of future extraction from the North Sea is very, very, if it occurs, is relatively marginal in a global context. So of course the UK government doesn't care that much about it. It cares about the employment aspects of it. It cares about what happens to, rig workers and people involved in the processing industry and so on. But in terms of, industry revenue, industry profitability and tax revenues, royalty revenues from the North Sea, it's pretty marginal. So it's much easier from an economic perspective for the UK to give up its reserves than, say, Saudi Arabia or Venezuela or places like that, where there's enormous amounts of abundant and very, very cheaply extracted oil and gas to extract. So that argument about, the UK doesn't, it's not a complicated thing. Oil and gas extraction has completely different political economics in different parts of the world.
So you think the UK shouldn't be doing it? Do you think there's an argument to be taking it? Because you've said...
Well, I mean, absolutely, I think from an environmental perspective, of course, everyone should be shutting it down, but that's not realistic or credible right now, given that if you shut down oil and gas production globally, you'd have all sorts of problems in terms of shifting demand at the same time as shifting supply in terms of energy. What I'm saying is that it's a straightforward decision. It's not like the UK government is being really bold politically in giving up what remains of the UK's oil and gas resources, because it's not giving up very much economically in the way that many other parts of the world would be. So I think when you hear Labour saying, we're going to stop oil and gas, it's like, it's not that big a deal. It's a very easy decision at the end of the day.
It's less of a big deal than people might initially
Much
think.
less of a big deal. Much less. There's not much left, and it's very expensive to extract. So the economics of it are not wonderful.
So just to be clear, for people thinking that I'm saying that the UK should be drilling new oil and gas, I'm not saying that. I'm ventriloquising an argument which says, well, it's pointless given that other people are doing that anyway. And of course, you mentioned Norway. Norway's a great case in point. I think, well, you'll know this better than I will, something like 60-70% of new cars bought in Norway are now electric vehicles.
It's all funded by oil and gas money.
It's all funded by oil and gas money, and they've got rising living standards, and they've got great public transport. And so I wonder, there's an argument there. Well, if there was revenues being generated through this stuff, would it be able to pay for instance, EV infrastructure in this country, charging stations, charging points, etc., which, quite frankly, we are not building it.
No, absolutely not.
It's not happening. Yeah.
And and let's be under no illusions about this. The Norwegians are fundamentally contradictory about this stuff. Even many on the left in Norway make the argument it's better that we extract the oil and gas because we extract it. This is what they say: we extract it in a more environmentally friendly way than Saudi Arabia and Venezuela and Russia does. So it's better that we do it than that they do it. The converse argument is, of course, you are like one of the richest countries in the world. So if any country is in the right position to be able to make the move away from fossil fuels from an advantageous existing position, it's you. But they don't want to hear that argument.
Interesting. You mentioned as well a moment ago one of your good friends being involved in ESG at a major asset management firm. Like I say, I think your best book of the recent 4 that you've written is Our Lives in Their Portfolios. I think it's brilliant. You've written these other books as well, though. But let's stick with asset management for a minute. I didn't know this, Brett, but you used to play for the other side.
I did play for the other side.
You used to work for PricewaterhouseCoopers.
I did.
So tell me a bit about your trajectory then, because people, I think, again, might be listening to this interview or, your previous interview, and they think, here we go, another academic talking about the real world of finance and, money. But actually, you've been in both worlds. So how did that come about? How does somebody go from PricewaterhouseCoopers to being a Marxist geographer talking about decarbonisation?
So I did. I spent 7 years in between my master's degree and my PhD out of academia, working in consulting, basically management consulting, strategy consulting in London. And I started that with what was then actually Coopers & Lybrand, which was one of the forerunners to PricewaterhouseCoopers. And while I was there, which was between 1997 and 2000, it merged with Pricewaterhouse, became PricewaterhouseCoopers. Yeah, and I worked in consulting, and it was an incredibly valuable experience, because for living in that world, working in I guess what you might call the belly of the beast for 7 years, I learned pretty much everything I know today about how that world works by working in that world, right? I mean, but just by seeing how capitalism works from the inside, and that's the great thing about being a management consulting, right? You go and you work with all these different industries, and basically what you do is, they pay you to basically learn about how their industry works. And one of the many reasons why I realized that I didn't want to do that long term was that this is kind of farcical when you think about it, in the sense that you're kind of going in there telling them to give you, hundreds of thousands of pounds to tell them how to run their businesses, and you kind of realize, no, we're not the people you should be asking really about this. And so I knew that I couldn't, once, if I stayed in that business long enough that you get to the level where your business becomes sales, going in and telling the businesses to give you the money, that I would never be able to do it because I didn't believe it. I didn't believe in the business world. But you learn a heck of a lot. I mean, it's an incredibly privileged life that you lead, because you go, you're kind of parachuted into these companies, and you learn a huge amount in a short amount of time about how companies and industries work, and that's been massively valuable to me, as an academic, looking at the same world but asking a different set of questions about it, right? That's the difference, is that I'm now asking different questions other than, how to maximize the revenue or the income that those firms might make. So yeah, I did that for 7 years. And it was refreshing, and it was instructive and refreshing for all sorts of different reasons. One of which is what you realize is that, a lot of the kind of moralizing left critique of that world doesn't cut it. I constantly hear colleagues make generalizations about the corporate world, the commercial world, and about the type of people that work in that world. And of course, for the most part, that's just not true. Most of these people are just same people like other people who just ended up in that world because they need to earn a living, and we live in a capitalist society. So of course, most people work for capitalist organizations. That's just the reality of it. And that doesn't make them bad people for being in that world. Most people are in that world because that's the world we live in. And it was also, in strange ways, it was quite a collegial world. Being an academic is nothing if not working in a relatively egocentric environment and a narcissistic environment.
That's so interesting.
And in the corporate world, it wasn't like that. Everyone, in my experience, it wasn't like that. Everyone at the company you work for wants the company to do well, because if the company does well, everyone does better. So in many ways, it was much more kind of team-based and collegial than academia is, in particular leftist academia.
That is so interesting. So the mindset at somewhere like PricewaterhouseCoopers or McKinsey or any of these kind of consultancies is more inclined to cooperation.
That was my
academia.
That was my experience. Parts of academia, and obviously there is kind of elbowing and so on in that world. But absolutely, I found it. The stereotype. My point is that the stereotypes just are not necessarily particularly helpful.
Do you think consulting's a grift? So Mariana Mazzucato says that, actually there's no net value created by consultants with regards to the public sector. Like, lots of it just shouldn't be happening.
I think, again, that's a generalization. And
is it a net grift for the public sector?
I think that there are, I would say on balance, it's a negative phenomenon. Absolutely. And I think that it's become a self-reinforcing thing whereby the public sector has been hollowed out of expertise by outsourcing stuff to consultants, and thereby it becomes a vicious circle, because it no longer has the expertise to do a lot of the things it needs to do. So it becomes a dependent relationship, and there are lots of times when not just public sector but also private sector companies use consultants when they definitely don't need to. They do it so that executives can kind of have a crutch to lean upon and say, well, McKinsey said to do this, so don't blame me.
You've got to be fired.
Yeah.
Sorry.
So there's all sorts of bad reasons for it. But I when I left PricewaterhouseCoopers, I went to work for a very small consultancy, like 15 people, 20 people, which was full of, and it was focused specifically on the media sector, and it was full of people who came from that world, who were unbelievably knowledgeable about that world, and they did, and I was able to work on a series of, many consultancy projects where I have no doubt there was an enormous amount of value added to those organizations. So it's impossible to generalize about it. In the way that I think, Mariana in that book, and with Rosie Collington in that book, I think there's too much generalization there. But absolutely, the public sector reliance on consultants, particularly in the UK, has for sure gone much too far. I don't think there's any doubt about that. Whether that's going to change over the next few years, I guess remains to be seen. I think, you'd know this better than me, but I think Labour have made at least some positive noises about reducing the reliance of the public sector in the UK on their consultants.
Are you happy you did what you did? So, and is it something you said you're happy? Let me rephrase that. Is that something you'd recommend other people to do then? So if there's a young person watching this, or not so young, and they've just finished their degree or master's degree, they have left-wing politics, progressive views, they're critical of capitalism as it exists, they might even be a Novara media supporter, and they want to apply themselves to a profession, a mode of being which changes the world in a better way that moves away from our present economic model. Would you say to them, look, there's absolutely no harm in going to work for PricewaterhouseCoopers, McKinsey?
100%. Yeah, 100%. It's a fantastic thing to do.
It's a smart thing for left-wingers to do.
Yeah, 100%. Absolutely. I mean, if you absolutely, I mean, the more you know about the world that you want to ask searching questions of, then of course you're going to give better answers to those questions. The risk, of course, is that, and this happens to lots of people, is you get sucked in, right? When you start getting paid, half decent money, and they say we're going to, raise your salary by £5,000 next year, and maybe you start to acquire some taste that become dependent on those things, and after a certain point of time, I think for a lot of people it becomes unimaginable to go back to working in another sort of, So when I quit, I'm 50, what am I now? 53. When I quit that business, I was 33, and I don't. And you had kids by then. I did. I have 2 kids by then, and I was by no means a high earner. I mean, I was in a consultancy. It wasn't a major consultancy, and it was not. And even there, it was like nothing like banking salaries. I still don't earn 20 years later anything like I earned when I was 30. No, not even close.
20 years later.
Yeah, not even close.
Wow.
Yeah.
And people who don't, we'll say this repeatedly. You're an academic at Uppsala University in Sweden.
Yeah, I have a full professorship, but I'm not even close to what I earned when I was 33. And as I said, I was, I wasn't on a particularly high salary.
Is your wife upset with you?
No.
She's saying, Brett, come on. Has that never entered the conversation? She's like, I quite fancy that chalet in rural Sweden. Please go back to.
Yeah. So of course people get stuck in that world. Of course they do.
I reckon my wife would say, Aaron, you know what? Fuck up your ideas. Especially if we had 3 kids. Anyway, yeah. I commend you. That's a real accomplishment.
But I live, we've talked about this before. I live in Sweden. 2 of my sons are at university. It's free.
Well, yeah. Why do you need to, right?
It's free, and they get a grant.
It's interesting. If you were in the UK and you had 3 kids and 2 want to go to university, they want to get in the housing market, you'd probably say to yourself, I maybe do need to earn some more money.
Yeah. And I had a good, I know we're straying off topic a little bit, but I was in the States recently, talked to a friend who's an academic in the US, and his eldest daughter had just started college, and she didn't end up going to this, but one of the college she was on her list that she wanted to go to, the annual fees were over $80,000 a year.
Presumably it was out of state.
Yes. Yeah. But still, I mean, it's a lot of money. So absolutely that's, and this brings us back to our topic of capitalism, right? I mean, there are structural forces that shape all of the decisions we make on a daily basis. And so, yeah, I mean, it is, your question, is it worth going to work in that world? Absolutely. But you need to go into that world with your eyes wide open, and you need to keep open doors for, to be able to get back out of that world. And of course, things like age matter, but academia, I think in general, is pretty good about this, particularly outside the UK. I think in North America and in Scandinavia, lots of people spend a lot of time doing other things before going into academia. Whereas in the UK, I think it's still a relatively young person's game in terms of at the entry level.
It's interesting you say this, because I mean, one of my closest friends is a quantity surveyor, and he works in the Gulf. And he works these massive projects, right? Building stadia in Qatar and whatever. He's not left wing, but he has a critique of capitalism, and he's seen close up like the amount of waste and just useless people in very, powerful positions, etc., etc. So he has a critique. And I'm thinking, I've often thought this actually, if you did have a radical left government, you're going to need hundreds, thousands of people like him to, quote, come back home. Something like HS2. Okay, we want to build HS2. We want to build Northern Powerhouse Rail. We cannot continue with the kind of costs spiraling as we've seen them. You're going to need, it sounds absolutely mad, you're going to need left-wing quantity surveyors. You're going to need left-wing QSs. And I think the conversation around left-wing politics in this country is completely tone deaf to that. It thinks actually a successful left-wing project would have thousands of people like me and you, right?
No, I totally agree.
Content creators and academics and journalists. You will need some of that, of course, to shift the political and cultural conversation, of course. But to actually administer the state, to actually run things, we're going to need people who work with spreadsheets and use their hands and have to problem solve in really agile ways every single day.
I agree, and I mean, and it's funny you should say that. I went to a talk last week in Stockholm at KTH, which is the engineering university in Stockholm. It's Sweden's biggest engineering university. Trains its engineers basically, but it also has a history of ideas department, history of science department, which is where there's lots of lefty people. And they invited a guy called Timothy Mitchell, you've probably heard of, wrote Carbon Democracy, Verso book, brilliant book, to come and give this annual lecture. And so he gave this lecture, and I was kind of sitting there wondering who was in the audience, thinking it was engineering school. And there were obviously lots of people, not just from the university, people came down from Uppsala, there were lots of lefty people there. But one of the when it came to Q&A afterwards, one of the people sitting in there said, I'm an undergrad doing an engineering degree here at KTH. And he said, Tim, what would a left-wing engineer look like? And Mitchell had no answer to that question, but it was a really interesting question because it's exactly what you're getting at.
He should have an answer. Yeah. Well, what's really interesting with the Green Party in this country is that, and I think this is interesting, right? So you've got the Labour Party, the cadre they build upon is really the NGO, legal services, industrial complex, right? People who basically bullshit for a living, okay? Academia as well, to some extent. Then the Green Party, Carla Denyer, engineer. Sean Berry, I think, has an engineering background. I think Caroline Russell, engineering background. And it's really interesting for me. There's a few others too. They've got 4 or 5 women at the top of that organisation who come out of, applied sciences, engineering, STEM. And I think that to me is like one of the few bits of, that's a good data point, right? There's lots of bad ones.
Yeah, no, absolutely. No,
There's lots of bad ones, and it makes them very empirical, very analytical. And I'm going to take your analysis of like the climate crisis so much more seriously. Because of that background. I have a question for you. Now, this is all really off topic, but I'm really enjoying this, Brett. Is it bad for the left that we generally, because you said that there was a more collegiate approach at what is now PricewaterhouseCoopers when you worked there, than in left-wing academia, which is more individualistic, more atomized, in a way, counterintuitively more competitive. Is it a problem for the left that the Anglophone left, that political leadership often comes from people in journalism, academia, NGOs, whilst political leadership on the right can often come from business, consulting, and that means that they engage with a wider range of people. They can access a wider range of problem solvers. Actually, sometimes they're better at working with one another in a way that the left isn't. I mean, I'll phrase this in a particular way. I look at Reform's MPs. You've got two of them in particular, Rupert Lowe and Richard Tice, who've come out of business. Now, I don't agree with pretty much anything they say, actually. I mean, Richard Tice is right on water nationalisation. That's about it.
Yep.
But what's interesting for me is how...
Was Rupert Lowe, was he the Southampton?
That's right.
Yeah. Okay.
Right, that's right. But it's interesting to me how willing they are to compromise with one another politically for a radical political project, which actually is kind of unthinkable on the left.
Yeah. I mean, I think that's the point about... I mean, the point about compromise, I think, is very, very important, which is that obviously in the business world, you can't get anywhere without compromise. And I think that's a really, really important point. So I'm not sure my answer to the question of whether it's a problem that it is that way, but I definitely think that a greater openness to people from different backgrounds can never be a bad thing. Absolutely. And I think, maybe I'm wrong about this, but my feeling, at least in the UK context, is that the left, there used to be greater diversity in the backgrounds of people that came into left politics in the UK than there is today. And I think that's significant. My impression now is that where the left is politically in the UK, at least the centre left, let's put it this way, I think they have a very strange relationship with business, where there's, on the one hand, very little experience of business, but on the other hand, there's a very much like, we want to work with business and we want business to fix things for us. Yeah. And that is a really kind of contradictory position, it seems to me. And I think we see the results of that, which is, maybe we'll talk more specifically about this later, where you do have Keir Starmer saying things about wanting, BlackRock or the likes to take a lead in doing certain things or assisting the UK and taking the UK in certain directions in terms of investment and so on, that are actually completely ignorant about what BlackRock is as an organisation, how it actually works. And so I think that's kind of a microcosm of this broader problem, which is like this I'm not sure what the word I'm grasping for is, but this issue where you have this reliance on business and kind of belief in business, but a complete lack of understanding of what's actually going on in that world. And that's the way I would put it.
That's really sharp, because again, like, it's so fascinating for me to look at the Labour project now. And by the way, when we talk about the left, I'm not just talking about the radical left. I'm talking about the centre left as well. But actually, in this respect, they have similar traits, I think. I think partly as an outgrowth of so many people going to university. I think the difference, of course, is that the centre left has a belief in the kind of the power of business to deliver a kind of a soft capitalism, yes,
whatever, which the genuine left, whatever you want to call it, doesn't have.
That's the big difference.
But I think the thing that they share is a relatively, a lot of the time, of course there are exceptions, but I think what they share in large part in the UK is an unfamiliarity with how that world actually, with the realities of that world.
That's exactly it. And I've said this a few times, but you'll see Rachel Reeves and Keir Starmer and Jonathan Reynolds and Peter Kyle and Wes Street and the whole Labour and Bridget Phillips and Liz Kendall, and they'll all talk about business. And I'm thinking, none of you have ever worked in the private sector. None of you. By the way, you don't have to. Nye Bevan never worked in the private sector. I'm not saying you have to, but Nye Bevan didn't also wax lyrical about the private sector.
No, exactly.
And they have literally, like you said, this is interesting inverse correlation between the more they talk about the power of business, the less they actually know about that world.
100%. That's exactly right.
Very, very strange. Wes Streeting was like he worked as a consultant, I think, for about 10 minutes. Liz Kendall, I mean, mostly these are people, just like I say, NGOs, lawyers, journalists, guilty, and then political industrial complex. Actually, a lot of them weren't even councillors. At least that's something. You've got some familiarity with delivering stuff at a local level. And that is really concerning. I mean, Starmer's the power, I love business, the power of the free market. The amount of times I've seen these quotes, Brett, and I think, if you love business so much, why didn't you start one?
Yeah.
Why were you a lawyer for decades? By the way, if you like being a lawyer, great. We need lawyers, sadly. But if you love it so much, why be a lawyer? Let me read this quote to you, and then I've talked a lot. You can respond to this. Because it's exactly what you're talking about with that attitude. Keir Starmer, and then he specifically mentions BlackRock. So this is in a now famous tweet recently. And I think it was him alongside Larry Fink, right?
Yep.
CEO of BlackRock.
Yep.
Asset management firm. I'm determined to deliver growth, create wealth, and put more money in people's pockets. This can only be achieved by working people in partnership with leading businesses like BlackRock to capitalize on the UK's position as a world-leading hub for investment. I mean, that sounds like an advert. What do you make of that tweet?
Well, I think that there's all sorts of things that can and indeed have been said about that tweet. The thing that stuck with me when I think about what he said there is this idea that BlackRock is actually a business that does things, which is not what it does. So there's this. I think somewhere else, either him or Reeves, I'm not sure who it was, but one of them talked about getting BlackRock on board in terms of building Britain's future. And that idea, while kind of superficially interesting, it flies in the face of what the companies like BlackRock are, which is, BlackRock's never built anything in its history. But BlackRock is simply an organization that exists by buying and owning assets that generate income. That's what it does. And the kind of messy world of building things, whether it's infrastructure, whether it's housing, whether it's businesses, is the last thing that the likes of BlackRock want to do, because that entails all sorts of risks and unpredictabilities and uncertainties and things that can go wrong. And BlackRock's entire business is about not doing that type of thing. It's about making sure that those types of risks are borne by other actors, including governments, but certainly not BlackRock. So the idea that is kind of out there that Starmer and Labour seem to be trading upon is the complete obverse of what the likes of BlackRock are all about. It doesn't want to build things. It wants things that are already there, and it can own them on behalf of the investors whose money it's investing, because those assets, whatever they might be, will generate a regular, reliable, predictable yield with no meaningful risk involved. And so renewable energy is the area that I know best in recent times. It's a great example. So if you drive around Norway, for example, or Sweden, where I live, BlackRock is the owner of many, many wind farms around Sweden, but it didn't build any of them. In fact, it didn't put any money into the construction of any of them. It got on board, and it gets on board when those developments have been or on the cusp of being finalised. And so when they get to the point of being operational assets, generating the electricity and therefore generating the regular, that's when BlackRock invests. It doesn't get involved at the earlier stage of doing, because it doesn't like risk. So this whole idea of like building things through BlackRock is just like it's a complete nonsense. That's not what it does.
Do you think Keir Starmer knows what he's talking about? So there's one reading of that tweet, which is, look, you've had the budget. Basically, you just want to signal to FT readers, the corporate class, we're not radical, right? And I don't agree with that. I understand that as a political thing. Or there's another reading, which I think is correct, which is he has literally no idea.
I think he has no idea. Yeah, I think he has no idea. I mean, I don't know that, but I don't think he has any idea. He probably doesn't know what the difference between BlackRock and Blackstone is. I can imagine he probably gets the two of them confused. Many people do. No, I don't think he has any idea at all. I think the one thing that I do think that people in the UK thinking about this should do is look to the example of New Zealand. This is interesting. So I was in New Zealand about a year and a half ago, and while I was there was this great sort of story that hit the news while I was there, that BlackRock and the New Zealand government had come to an agreement that BlackRock was going to set up this new climate infrastructure fund specifically for New Zealand. It was going to raise something like $2 billion to invest in climate infrastructure.
Closed or open fund?
I think it would have been a closed fund, absolutely. And there was and obviously the political leader who had negotiated this, traded on it in exactly the same way that Starmer is doing. But there was something substantive here. A year and a half later, as far as I know, BlackRock has invested nothing in New Zealand. And obviously the reason is that the New Zealand government hasn't put on a plate for BlackRock the types of investments that it would consider attractive enough to put its money behind, which is to say those that are generating predictable annual yields of 8, 9, 10+%. Those haven't been forthcoming, so that hasn't invested. So all the kind of political excitement about that has dissipated. And in fact, the opposite has occurred, which was that just about 2 weeks ago, a solar installer that has been in business for 50 years, that BlackRock became the majority owner of, I think, a couple of years ago, has had to file for administration because BlackRock's pulled its investment because it's not making enough money. So I think that that's where I would be looking if I was in the UK, interested in what the future of the UK's glorious relationship with BlackRock might look like. Look at what's going on in New Zealand, and it's not a particularly attractive story.
It's absolutely remarkable to me that almost by definition now, politicians, people who are administering the state, don't believe the state can do anything.
I mean, I think that's a big part of the problem, right? Partly because it's not the only reason, but it's partly because that obviously gives an enormous amount of power to the people on the other side of the negotiating table, right? If you are private sector asset managers and you know that governments don't have, or at least don't believe they have, the option of investing themselves, if you're not going to pony up the money for investment on terms that the government considers attractive, then that puts you in a massively advantageous position.
But why do the politicians believe it? I mean, if you look at Notre Dame, right? So in not even 5 years, less than 5 years, they crowdfund. This is obviously, I'm not proposing that's how we do restoration of of old buildings, but basically because this became a matter of national prestige, these incredibly wealthy families in French public life, they donate for the most part, money to this project. They donate altogether, donations coming in for Notre Dame about 740 million euro, I think. It's completely rebuilt the parts that are destroyed, and the rest of the building is clean for about $600 million. Happens, in other words, under budget, ahead of time. It's overseen by a French general who bizarrely dies halfway through this thing. My point is, BlackRock probably couldn't deliver that on that timeline. So I find it so strange that, and in a crisis, of course, people don't say, hey, call McKinsey about how we should do full mobilization. That's not what happens when there's a moment of national crisis. We're all socialists in a crisis. And yet politicians seem to, like Keir Starmer, they seem to sincerely believe that BlackRock, the people like Larry Fink, have a better understanding of how to generate prosperity in this country than Keir Starmer does. I mean, that would be a great question, actually, to put to Keir Starmer.
And I don't know what the answer is to that. I don't know whether they actually believe that, or whether they think that's what the electorate believes, so it would be to pursue a strategy based on that understanding is logical in one way if you as a politician believe that the electorate doesn't have any confidence in governments to do things themselves of those kinds, or B, to run the public finances on that, basis through public borrowing and all the rest of it. And so I don't know what the answer to that. I don't know whether it's they actually. You see what I'm saying? I don't know whether it's a genuine, whether they've kind of drunk the kind of neoliberal Kool-Aid so much that they simply believe that government shouldn't own and operate these types of assets, or whether they simply think that that's what the public believes, and therefore that they're going to get kicked out of power by taking any kind of alternative strategy. I don't know what the answer to that is, but it's one of those two things. Maybe it's a mix of the two.
I'm also going to quickly read an email from Jonathan Reynolds, who's a member of Cabinet. This was an email he sent to a managing director at BlackRock in August, just so people realise this isn't just Keir Starmer, for public consumption. This is a private email. Partnership with the financial services sector. And again, I genuinely think Jonathan Reynolds doesn't know what an asset manager is. I genuinely think he thinks, bank, asset manager,
same
wealth
thing.
Yeah, it's just people that make lots
It's
of money.
money.
Yeah, money. People that do stuff. Partnership with the financial services sector will be critical to developing and delivering on our industrial strategy and supporting small businesses. How does BlackRock help small business? How? The sector underpins UK investment and trade, and its continued success is critical to lay the strong foundations for economic growth that this country needs. He adds, I would like to thank you for your long-standing investment in the UK and partnership in driving growth, jobs and innovation. BlackRock has an impressive reach driving investment into the UK across sectors of our economy, and your work is vital to economic growth. Funding our priority projects and investment in infrastructure is an important part of this. We do not underestimate the importance, again, of the UK's financial services sector. He has no idea what he's talking about. To the wider economy, or its potential to help deliver social value and the clean energy transition.
Yeah, it's just fluff.
Do you think?
Yeah, it's pure fluff.
ChatGPT.
Yeah, maybe.
Together, and this is the worrying thing, Brett. Together, we will change the face of our United Kingdom for the better. Does he think BlackRock's a British company? He's probably firing this off to somebody in New York who has fucking no idea, does he? Anyway, enough of Labour. Sorry, Brett.
That's all right.
People are saying Aaron's talking too much. I want to hear more from Brett. He's the smart one. But I have a lot of anger about that. Listen, Trump.
Yes.
Obviously, he's coming in January 20th. Now, the insurgency behind Trump, we've talked about this a ton on the show, is about rhetorically pitching family capital against global capital, coastal elites, small businesses fighting back against the likes of Goldman Sachs, BlackRock, etc. That's the political pitch. What's the reality going to be like?
I mean, it's hard to imagine that that anything is going to substantively change in the relationship between the US government and capital. Is my view. But
that part of capital.
Well,
he could align himself more with the Silicon Valley kind of,
Yeah, I mean, I think absolutely from a
what was it called? The broligarchy.
I mean, that definitely seems to be part of what he's doing, right? Is in terms of kind of cozying up to Silicon Valley, is definitely part of it. But I don't think that there's any prospect or likelihood of any kind of displacement of the centrality of the big asset managers. At all. I mean, those asset management firms have been very savvy in terms of making sure that they have close connections with both the Republicans and the Democrats. They're not stupid about this. So Blackstone, the other black, famously donates very large amounts of money to both parties. Its CEO is a close confidant of Trump. Its COO was very close to Biden. So they're very, very savvy about these things. So I tend to think that not much is going to change on that front, personally. But I think, what is different, and you, as you say, you guys have been talking about this a lot, and you know more about it than I do, is the relationship with Silicon Valley. That seems to be the kind of the difference in terms of the political economy of the relationship between capital and the state that's going to happen over the next few years. But I don't think much is going to change on the relationship with the finance side.
So you've got Musk talking about cutting Doge by cutting the US state by $2 trillion, using Doge. I can't remember, the Department of Government Efficiency. That's it.
Yeah.
And of course, every Republican has been saying this since since Reagan. Every Republican president, you can go back further if you like, since Reagan. And the indisputable fact, and this is something I spoke about with Ruchir Sharma, who's on the other side of the political divide, writes the FTs at Rockefeller Capital. So the indisputable fact is that the state has grown since the 1930s.
Yep.
Reagan said he was going to shrink the state. He doesn't shrink the state. No. And I wonder, the same with, it'd be really interesting if Elon Musk significantly cuts the size of the US state, that would be without precedent, actually. Do you think he's capable of doing that?
That's beyond my. I think that's beyond my wheelhouse in terms of.
But why is it? Because you're somebody who's
because it's speculate. I don't like speculating. That's
yeah,
why.
But you're a historical. You're partly a historical materialist, and I wonder. You think, well, look, he's from a fragment of the capitalist class, which doesn't enjoy the same kinds of relationships. He's been a disruptive force with regards to that fragment, i.e., Silicon Valley, in the last 30 years.
Yeah, I don't see where they're going to cut. Like they're not the US state has grown.
Security state.
Well, that's the obvious one. But do you genuinely think that that's likely? I don't think it is. Well,
that's why I'm asking you.
I don't think it's likely. I think it's. Musk. That kind of rhetoric. Maybe I'm wrong in this, but it reminds me of the rhetoric of what was his name in the UK. The guy who was going to change everything about the relationship, Cummings.
Dominic Cummings, but very similar, yeah.
Yeah, it reminds me of the Cummings rhetoric. And my impression with what happens with Cummings was that once he kind of got his kind of feet under the table and sort of saw the complexity of what the state actually consists of, which is a set of social relations rather than a thing, that Musk will pretty soon lose interest. Actually, is my guess in terms of trying to get his teeth into making significant changes in the operations of the state, of the kind that he's been talking about, because he'll realise that it's just too much hassle, is not necessarily going to be sufficiently beneficial for the business interest that he has, which presumably at the end of the day is what he's interested in. And I think that things will just carry on much as they are regardless. I don't think that he will have the patience. He never strikes me as a particularly patient man, not that I know anything about him. And I think that type of project requires an enormous amount of patience and commitment, which I don't expect that he's going to have, given the range of interests and things that he already has on his plate.
So is your analysis that the US state will just get bigger and bigger and bigger? Because I think people haven't realised this, but it's running record deficits now under Trump, under Biden. Since 2008, it's been in this really strange new world. And clearly something comes to a head at some point because you're the global reserve currency for a reason.
Well, maybe. I think that... that just seems to be one of those issues where the can just continually gets kicked down the road, right? They have these repeated sort of standoffs where Congress says we're not going to increase the budget, we need to worry, and then it gets resolved again and again and again because of the fact that it is the global reserve currency, and the fact that and the fact that people are going to continue to buy the debt because of its standing as the global reserve currency. And so I think that for as long as they can continue to kick it down the road, they'll continue to do that. And I think that at the end of the day, it seems to me, and this is based on my reading of people that know more about this than I do, that for as long as the dollar remains the global reserve currency, they continue to have the power to do that. So I think that seems to be the really critical question there, and given the problems that China is facing at the moment, it seems to me unlikely that that's going to change anytime soon. So I know that there's a lot of kind of concern about what the sort of Trump Musk axis might do to US government in that particular sense. But I suspect that it won't change that much. Of course, there's all sorts of other things they're gonna change a lot, but I don't see it on that front. I think there's so much kind of path dependence there. I think there's so much kind of inertia. I think there's so much that's kind of built into the state and the relations between state and the insurance sector, the private sector, the finance sector, the relationship with asset managers that is not easily unwound is the best way I can put it.
So what's really interesting for me is that the US, okay, it's growing at a really impressive pace by the standards of the G7. People don't talk about this enough, partly because its population's increasing.
Yep.
Right? I mean, China's is not. So when people say, China's only growing by 4.5%. Yeah, it's all productivity growth, if you believe those figures. It's all productivity growth. Its population's increasing, and a lot of the growth is debt leveraged.
Yep.
So I think if you look really at the last 7 or 8 years or something, basically $1 of growth has been born of $1 of public debt. And that's clearly not a viable solution. They're running these massive deficits to get the growth they're getting. Fine. And
the only thing I would say about
they can't do that forever. They can't just have a growth model based on. So what I'll say is this, and you're saying that look, the dollar will remain the global reserve currency. I agree with that.
And people have been saying that you can't run those, that you can't increase the deficits for a long time, and it can. Well, is my view. Well, I've been hearing that.
They've been since the 70s, right? And that's true. The US has been running deficits since the 70s, although you get this brief pause. With Clinton runs a couple of surpluses, but I think the scale of them now. Clearly now, I think capitalism has entered this moment, post-global financial crisis, but it appears to be getting worse to me, which is without 0% interest rates or close to, without government stimulus, you literally don't get any growth.
Yeah.
And that starts in 87 with Greenspan put, like the first time people start saying you need to stimulate an economy which isn't in recession. And that now seems to be the norm of a lot of Western economies is they need a permanent stimulus just to grow. And so I think that's one factor. Then the second thing about the global reserve currency, I agree. I agree with the super imperialism hypothesis. And the US is unique in that regard. But you also look at things like gold prices, Bitcoin. Yeah. You look at other assets like Swiss franc or whatever, Oz dollar, whatever. It's tiny, but you can see people moving away from the dollar. Transactions between, say, China and Iran, which aren't using dollars, etc., or Russia and Iran, Russia, China. Anyway, this is all speculation. It's interesting, but it's all speculation.
Yeah, and as you will have guessed, that sort of speculative stuff is when I get cautious because you're
an empiricist.
I am. That's exactly what I am.
Let's go back to your wheelhouse, as you put it. You wrote a fabulous book about land and enclosure, and you've got one of the statistics here is that. Since Margaret Thatcher's election in 1979, 2 million hectares of British land, 10% of the country's total surface area, has been sold off by public entities.
Yep.
That is remarkable. 2 million hectares sold by the public sector in the last 45 years. That amounts to the largest privatisation of land in this country's history. Tell me about that, and what kind of entities are we talking about that are part of losing 2 million hectares?
So most of it, if I remember the figures correctly, that book came out 6 years ago, incredibly enough. Most of it, certainly proportionally, maybe also I think in absolute terms, has come from local authorities who have been cajoled, pressured, sometimes compelled to sell off land. And a lot of that would be, that old local authority farming estate, allotments, playing fields, residential land. Obviously, huge amounts of it has, everyone knows about right to buy, the housing privatisation. Well, the housing privatisation was obviously, by its very nature, in significant part a land privatisation. So a lot of it's come from local authorities. Huge amounts has come from local authorities. In terms of central government, the main loser, so to speak, have been, I think, the Ministry of Defence sold off a lot of land. Forestry Commission, which is actually the UK's largest landowner of any type, has also sold off lots of land. NHS sold off lots and lots of land. So it's come from across the board, but local authorities have been the real kind of nubbin of it. And of course, And of course, that's part and parcel of the story about kind of the death of municipal England that people talk about, which is the fact that, local authorities, at the same time as they've had their grants, massively cut, particularly since the financial crisis, but also before that, they've also had to lose. They've lost a lot of their asset base as well. They'd lost a lot of it before the financial crisis came along. But then the way in which they responded to the austerity drive in the 2010s, where local authority grant budgets were cut, was by selling even more of their assets. So most of them have not got much left that they can liquidate to keep themselves afloat, which is precisely why lots of them got into kind of those speculative property ventures. And it's very easy to criticise them for that, where they took a punt on a new shopping centre.
Well, Croydon's the big example.
Yeah, Croydon.
Right?
There's lots of other ones as well. But if you don't want to cut your social care budgets or your homelessness budgets, but you don't want to increase council taxes, and the government's reducing your grant, what else are you going to do? You have to do something. So I find it, I trend not to be too critical of those councils, because they've been put in the position by central government that they've ended up in. It's not a crisis of their own making, in my view.
Yeah, the great example at the moment is Hampshire County Council, and I think something like 83% of spending by Hampshire County Council is on social care, child and adult social care. Obviously, most of it's adult social care. I find it quite interesting that you've got a place historically Tory voting. It's completely shafted by demographics, and do those people continue? Well, they haven't voted Tory. Many of them voted Lib Dem the last election, but what's the future for those guys? Because it seems to me, as long as local authorities have to do social care, which I think is insane, I think the national government should be in charge of that, this just gets worse. I think combined with all the things you're saying, so you've got less resources, all these constraints, and they're being expected to basically deal with the demographic crisis.
Yeah, I mean,
doesn't seem very wise.
Yeah, I mean, local authorities, like local governments, like the kind of car crash, what's the metaphor for it? It's like the kind of long-running car crash of British political economy. Really, it's in a constant crisis, and has been for a long time, and it's hard to see it getting better. I mean, there's lots of reasons for that, but one of the main reasons for it, I think, is the degree of centralised political power in the UK compared to other countries. I live in Sweden, where most income taxes are paid to local government. In the US, most income taxes are paid to local government. The UK is obviously completely different. We pay all our taxes centrally, and so local governments are very reliant on those disbursements from central government. And if those get cut back in the way they were under George Osborne and have never recovered, then there's not much left. There's not much left you can do. So it's a real kind of signature fault line of the British political system, which I think is consistently underreported in the UK because of the kind of the obsession of the media class with what's going on in Westminster and London.
Well, we try and do better here at Novara Media. So if you like what we're doing, having these conversations, you know what to do. Go to novaramedia.com/support. The link's in the description below. The great piece in The Economist a while back talking about precisely this: Gothenburg versus Bristol.
Right, I didn't see that piece.
Really good. And then you look at the quality of public transport in Gothenburg compared to Bristol. Oh my God, very large city. It's a car crash. I mean, the traffic in Bristol is as bad as the traffic in London. It's probably worse.
Right.
You think London is a mega city of 8 million plus people, and Bristol is a provincial city of a couple of 100,000, greater area 1 million. And anyway, and that in that article they kind of outline how that's primarily an outgrowth of not really giving local politicians, bureaucrats, enough money to actually solve the problems that afflict local people.
Yeah, I mean the really sad thing, or one of the many sad things about that story about land privatization that I told in that book, is that the flip side to the kind of denudation of the assets of local government was the enrichment of a class of property developers and financial institutions who, in many cases, picked up that land, that property on a song, and has sort of made out like bandits from it. In fact, I saw the case this week. There was the case that was reported this week. A classic example of that was the Ministry of Defence in the Married Quarters estate, where in 1998, the Ministry of Defence sold off it's the 30, whatever it was, I think it was like 40,000 homes, married quarters estate for the Ministry of Defence to private equity firm, Guy Hands' private equity firm, for I think £3 billion. And then
This was under Major, right?
So 98 would have been Major, that's right. Or no, 96.
It's earlier. Yeah,
it was 96. It was before Labour. It was the year before Labour came in. It was 96. And over the subsequent years, that private equity firm has sold off, I think about half of that estate. And then this week sold it, the Ministry of Defence bought it back for $6 billion. And it was like half the size of it had been then. And it's just like a why, why was that deal done? It was like anyone could have said at the time that it was an absurd thing to do. They locked in, so they sold it and then leased it back. Presumably, it was about the look of the balance sheet.
I think there was a deficit crisis at the time, right? Something like that.
So it was all about kind of the appearance of the balance sheet, and so they sold it off and then immediately leased it back on long leases of like 99 years or something at predictably increasing rates over that time, and it's been an absolute financial disaster for the Ministry of Defence, and they've now bought it back.
China doesn't do this stuff. That's why they're doing okay. Xi wouldn't have that. It's interesting as well. A lot of this stuff, the most wacky privatizations. Another one is rail under Major. People make these grand ideological arguments for rail privatization. It was privatized because of a balance sheet. That's like you say. It was because there was a deficit crisis in the early 90s, and they sold off some assets in order to make the numbers add up. And we were running a surplus in 97, 98. Because of those choices. That's it. That's what it boils down to. It wasn't because they thought the private market system can do trains. I mean, they think that as well. Of course they do. But that wasn't the impetus.
Yeah. I think the privatisation story, so obviously we were talking about privatisation of land. I mean, one of the really interesting things about the land story, you asked where it disappeared. A lot of it disappeared with the state-owned enterprises. So water companies in particular, when they were privatised, they were privatised with lots and lots of land, which turned out to be not necessary for their businesses. And so many of them became very, very large property developers. Same in the electricity sector. So National Grid, one of the most profitable parts of the National Grid business is property development business, property rental business. And it basically got sold off for free. So sold off's the wrong word, got given away for free. So that's where a lot of the coal, when British coal was privatised as well, huge amounts of land disappeared there then, and it was all basically just given away for free.
Why is the state or the contemporary state, why is it so eager to get bad value when it sells stuff? Why is it? Well, it's like saying to the market, please screw me. I want as little money as possible for these assets.
I don't know what the answer to that question is. I think it would be fair to say that I think we have to say that part of this is like it's easy to say with hindsight. I mean, I think at the time when a lot of these privatizations occurred, the way in which the economy subsequently developed and the growth in value that many of these assets subsequently achieved would not necessarily have been predicted by anyone. So I think it's obvious with hindsight that terrible value was achieved. And yes, I think there were some people that said at the time we're underpricing these assets. But I think there were lots of people that probably thought that some of these were reasonable prices. So it's important not to just sort of say.
I appreciate that, but surely,
there's no doubt that lots of bad deals were done. I mean, I think, look,
surely there are people out there. There are civil servants who say, okay, worst case scenario, we're losing hundreds of billions of pounds here. Worst case, do they not think in those terms, or?
I don't know the answer to that question, but I do think there was a couple of things. So one of the reasons, of course, was that when you had a lot of the British privatisations, there was the hope that the UK was going to become a shareholding democracy, right? And that a lot of these firms were going to end up being owned by the masses. We were going to democratise asset ownership in a way that never, apart from housing, arguably, never really happened. And so I think that was part of the thinking, was that the British people should be able to acquire their assets at a reasonable price. That was part of it. I think that was definitely a part of it. which obviously you saw in the case of council housing, but I think it was a more generalised part of it as well. But there's also, the private sector has always been very, very good, and still is very, very good at saying we are not going to take on ownership of ownership and custodianship of these types of assets unless the risk of doing so is taken away from our shoulders. And that's a line that policymakers have continually bought. So that's the second part of it. And then I think the third part of it is that, so many of these assets that were sold off were natural monopolies to all intents and purposes: water, electricity, gas. Only really telecoms, because of the arrival of mobile, ended up having any significant competition. And there was always this argument that you wouldn't get super profits emerging in these types of sectors like electricity and water and so on, because regulation would do the work of competition in terms of kind of keeping profitability under control and so on. And British regulators just failed historically to do that. And so there was a period, I think it's changed a lot today, when the chickens have kind of come home to roost in a lot of these sectors. But there was a long period of companies in those privatized sectors making out like bandits because they gamed the regulatory system incredibly successfully. And so the expectations that regulators would do a better job of ensuring that the benefits of any efficiency gains flowed to the public rather than to those privatized companies, they failed in doing that, basically. And so I think that maybe the value at which those assets were sold would have looked better retrospectively if regulators had done a better job of ensuring that the benefits of privatization, whatever, to the extent that they existed, flowed to the public in part as well as just to the companies themselves. So I think there was a range of different answers there.
That 2 million hectares of land, which was sold on the cheap, how much did the public lose out on? If we're looking at the change in values, and I'm not suggesting that was intentional and benefit of hindsight, etc., but how much have we lost out on in terms of selling assets on the cheap and their subsequent price inflation?
Oh, tens of billions of pounds.
Tens of billions?
Yeah, absolutely. Yeah, even just in council housing. Even just in council housing, you look at the average value at which the prices at which those assets were sold. They were sold at average discounts of 50 to 60, maybe 70% in some cases to market value. And at the times at which they were sold, you look at the times when they were sold, late 80s, early 90s. That was when UK house prices were at their absolute historic lowest point. And so you think about the change in value of those assets since then. It's just an enormous amount of value that's just disappeared.
In the hundreds of billions.
It could, it could well be. It absolutely could well be. But it's at least tens of billions.
And we don't really have that. Another one is, of course, water. Water's privatised in 1989. Since then, they've burdened themselves with £60 billion worth of debt. I think 56 billion has been paid out to shareholders. So you're talking 116 billion just on those two things. And we've not built a reservoir in this country for decades. Thames Water itself has said it needs 18 billion to upgrade infrastructure just to meet needs. So that's just such a direct transfer of money away from the public realm into the pockets of shareholders, corporate 0.1%, and that's just water.
Yeah, I think the in a way the most damning indictment. I know we shouldn't need to resort to this, and we don't need to resort to it, but it's a telltale story. I think is that like Martin Wolf at the Financial Times, you read him. And I think his writing basically says that privatisation, essentially across the board, maybe telecoms aside, has been a disaster in Britain. That's the chief economics commentator at the Financial Times.
I've had a few people on the right say that to me, and I say, look, we can
it's been
aviation,
it has been
telecoms,
a disaster.
yeah.
And telecoms was fortuitous because mobile came along
Yeah.
to represent competition to landline telephony. If that hadn't happened, probably would have been a disaster. But that's the only possible kind of exception to that story. But the rest of the board has been a complete disaster.
Yeah. I had a journalist at City AM accept that I think on water and policing, army housing, they've like the private sector should never have been doing this stuff.
Yeah. No, absolutely.
Also, I'll stick on this point for a minute because I still think politicians don't really get it. I saw Angela Rayner when she was making an argument to keep right to buy. And she was saying, well, people want to buy their homes. They've lived in them for a long time. They should get some kind of a discount. And I'm thinking, okay, well, I'm the taxpayer. Let's say where I live, Portsmouth, you're a unitary authority. Why should I subsidise that person to have a below market rate house?
Makes no sense.
And then she's saying, but then the money can be put back into building a home. Well, you're operating at a loss. No business would do that.
No, there's never been a logic. Right to buy was buying consent from a subset of the population.
But there is the argument as well, if only they built new houses with the money they generated. Well, you're selling below market and you're building at market. You're going to lose a shit ton of money. Which they still say, right? Someone like Angela Rayner will say, well, she doesn't now, but I think because she literally hasn't really thought about it, well, we can sell these out and we'll use the money to build new homes. So why should councils are already buggered? Why would they operate at a loss with that stuff?
Yeah, don't get me started on how, but housing is just, a cataclysmic disaster in the UK. But it's obviously not just about right to buy; it's about all sorts of other stuff as well. But it brings us back to asset managers. The idea that asset managers are going to help the UK build its way out of its housing crisis is absurd. The last thing they want to do is add new supply, because add new supply and there's a risk of rents going down. So if you read their annual reports and you read what they say about where they buy housing in places that are supply constrained, and they expect to remain supply constrained because that's what keeps upward pressure on rents. So the idea that those people who are telling you that as soon as they see new supply coming on stream, they sell, that they're going to build, like they're going to fund the construction.
Those people are going to build.
I mean, it's totally absurd.
Yeah, Starmer has this thing about build, but like you say, the incentives there are complete odds with the rentier model, which he has seemingly no problem with.
No, absolutely, they're completely at odds with the rentier model.
I've got one more question, which is, you wrote the Asset Managers book, 2022?
Yes.
Yeah.
Yep.
And now, obviously, we're in a world of less easy money.
Yes.
Interest rates now 4.75%
Yep.
UK Bank of England interest.
They've just held them, right?
Yep. Much to the chagrin of this country's zombie companies all going bust, and now they can blame the Chancellor, lucky them, and actually goes deeper. Anyway, obviously a lot of that stuff was 0 or close to 0% interest rates meant a lot of asset inflation and really underpins a lot of the sort of economic model you're talking about.
Yep.
But if interest rates are now permanently higher, because inflation is going to be permanently higher for whatever reason, to what extent does that undermine the model of people like BlackRock?
Yeah, it's a great question. So I was finishing up writing that book, 21-22, exactly right. And in the last chapter, I sort of took a stab at trying to answer that question, which was like, what does higher inflation and the combination of higher inflation and higher interest rates mean for a business model that in many respects has been dependent on very, very cheap debt? And I got it wrong, actually. I think I basically said that it won't change much, and the reason I said that was that there were a bunch of reasons, but the main one I said it is that the types of investment that I focus on in that book, which is investment in housing and investment in infrastructure of various types, energy infrastructure, transportation infrastructure, all the rest of it. Yes, that investment, when carried out historically by asset managers, has typically been leveraged. So there's a lot of borrowing involved. But both of those types of investments are known to be good hedges against inflation, particularly housing, but also infrastructure. So it seemed to me that in an inflationary environment, even if interest rates have gone up, that you will still get lots of investment going in there, specifically as a hedge against inflation, because that would be a better hedge against inflation than other asset classes. I think that in the housing space, that has proved true. I think they've carried on investing very, very significantly in housing around the world in the last. But infrastructure has been different. If you look at infrastructure investment by asset managers, infrastructure funds since the beginning of 23, it's fallen off a cliff because that cheap debt hasn't been available to them. and that's changed the economics of it to a significant extent. So go back to the New Zealand example I was talking about earlier. I think one of the reasons why they haven't put any money to work in that space is because the debt that they've historically been relying upon to carry out those investments is not available. So I think it's a real question. I think they've been waiting for interest rates to come back down so that they can get that cheap debt to boost their returns and make the numbers work for them again. And in the UK, that case in particular, it doesn't look like it's happening. If interest rates normalise around that level,
which historically, that's what happened on New Labour. It's not like it's crazy high.
Absolutely. But that's so people really need to understand. So what happened? So the reason there was so much asset manager investment in infrastructure in the 2010s was a lot to do with low interest rates. And it wasn't just about leverage. It was about the fact that if you look at whose money asset managers are investing, it's things like pension funds. And when pension funds invest, they're looking for two things. They're looking for long-term capital gains. They want the assets to go up in value. But they're also looking for reliable annual yields, annual income, 5, 6, 7% incomes, as the other thing they're looking for. Historically, when investors were looking for investments that would yield that annual income, they invested in bonds. They were investing in corporate bonds and in government bonds that would pay a 5, 6, 7% coupon per year. After the financial crisis, when interest rates fell to zero, bonds didn't offer that anymore because bond yields fell to that level as well, or close to that level. So asset managers are like, well, what do we invest in now that's going to generate these housing and infrastructure? Rents and infrastructure yields provided that annual income. But now, of course, they can get it from bonds again. So infrastructure has become much less of an attractive investment proposition than it was 4 or 5 years ago, including renewable energy infrastructure. That's one of the big reasons why infrastructure investment, including in renewables, has stagnated in most parts of the world, apart from China, in the last 2 or 3 years, is because interest rates have gone up again. So not only is the debt more expensive, but there's a competing asset class where they can get those types of annual yields that they're not dependent on an infrastructure for anymore. So again, brings us back to Keir Starmer. Do you think Keir Starmer realizes this when he's doing his photo shoots with Larry Fink, that Larry Fink is going to be much less interested in investing in British infrastructure if interest rates are 5% than if they're 0%? It's going to be way less interested in doing that.
It's interesting what we say about green energy because, since 2010, the UK has laid down a ton of, basically all of its solar and most of its wind has been since 2010.
Yep.
And most people say, well, that's because of this is in one of your books, the declining costs of the technology, the experience curve is falling, and that's why things like wind and solar in many parts of the world, including this country, have price parity now with fossil fuels.
It's not true.
Well, it's not. Some part. In California or whatever, it's.
But what I mean by it's not true, the reason I say that is that the generating companies that have been building the new infrastructure, they have typically not been the ones that have captured the benefits of those costs. Those cost reductions have been competed away and have flowed to consumers. Yes. They flow to consumers. It's happened because of government support, a really good feed-in tariff contracts for different scheme that supports investment, and a carbon tax.
But also presumably the cheap money.
And cheap money, absolutely. And now, that's come to an end. But I think, the carbon tax one is really interesting. The UK, unlike most other countries, has had a carbon tax specifically on coal-fired power plants. And that's played a really significant role in the phasing out of coal-fired power in the UK. And we we like to tell ourselves that nowhere has carbon taxes, but in certain places and in certain sectors we have. And one of the things I think UK has done really, really well on is its support scheme for renewables, and the carbon tax specifically on coal-fired power plants. And that's played a really significant role in phasing it out.
I said final question. I'm going to do it properly this time. One thing you're optimistic about in 2025?
So that's always the most difficult question for me. So we've been talking a lot about the UK, and I think that of all the parts of the new UK government, the newish UK government, the most at least to my garbled. I would say that of all parts of that government, at least to my impression, there is the one that is full of what seem like relatively competent people and is saying and doing some relatively ambitious things is Ed Miliband's department, the energy department. And I think that their, really ambitious plans to push towards a clean energy sector by 2030 seem, at least on the limited reading I've done so far, to be competent, well thought through, even potentially achievable. I think that's a positive thing for people in the UK, at least, to be positive about. And I think that makes that part of the new UK government stand out from the rest of the government. Whether they'll be able to see through on that, whether they'll get the kind of latitude from the Treasury to be able to, utilise the resources they need to do that is a different question. But I think that they're at least showing some ambition and energy and serious thinking in a way that distinguishes them from the rest of the UK government.
Brett Christophers, very good place to end on. A positive note for the next year. Thanks for joining us.
Thanks for having me.